Hi, everyone. Welcome to day 2 of the Psychology, Discipline, and Time Management 2023 conference event. This is Synergy Traders number 45, hosted on TimingResearch along with my co-host, Anka Metcalf of TradeOutLoud.com. And just a reminder that, of course, all of these presentations are for educational purposes only, and trading is not suitable for all people. Be sure to consult a financial advisor and only trade with money you can afford to lose. And all sessions are being recorded individually and will be available on TimingResearch.com. So today, day 2, we're going to get started with Valerie Fox. So I'm going to go ahead and turn it over to her.
Hello, everyone. Thanks for joining this conference live, the first presentation of the day on day 2. And if you're watching this as a recording, welcome. Today, I'm going to be talking about the secret to emotion-free trading. And, you know, the psychology of the mind is a really important component of trading. So I love this particular conference and how there's so much dedication to mindset and discipline and time management. I think those are all really important components that sometimes when you get going really fast with the strategy can be overlooked. So I'm happy to have you all here. I'm probably going to be doing a little bit of engagement with you all in the chat box. I try to make these as engaging as possible. So if you could, on the chat, just change your responses. The default is to the host and panelists. If you could just find that chat box and change it to everyone. And that way, when you respond to some of the things we'll have cooking in this presentation, you will get to see everyone else's responses. So let's dive in. David just covered a disclaimer, so I'm not going to read this in detail other than that, you know, it's for educational purposes. And there's always risk involved in trading. So make sure that you feel comfortable trading and consult any licensed professional for formal trading advice. So the agenda for this session, we're going to dive into why and how emotions get in the way with trading. We're going to talk about the best way to entirely eliminate emotions from trading, which to some people might seem impossible, but when I go through it, I think you'll see that it is definitely possible when you focus on the right things. And then that leads me to the next vote and final point, which is where people's and traders' focuses should be when they're trading. So this information is applicable to all traders, no matter what you trade, no matter how much experience you have. So do me a favor in the chat. Let's see what kind of traders we have on the line. Let everyone know in the chat what you trade and how long you've been trading. Let's see what kind of representation we have on the line here. I personally have been trading. Oh, and also at the end, I am going to open it up to Q&A. But I've been trading Forex for, gosh, 12 years now. It's the only market that I trade. I do have investments in other instruments and things like that, but Forex is my go-to, although I work with traders in all markets. So 12 years for Forex for me. I'm starting to see some responses come in. We've got a crypto trader for a year, stocks 2 years, just beginning, thinking of futures. We've got options for 45 years. Whoa. Can anyone beat 45 years of trading experience? That person, 264162, because I don't see your name. You might be the winner of this game. 45 years. That's amazing. We also have someone who's been trading the US 30, NASDAQ, gold USD, Euro USD, pound USD for a year. Other people just beginning. So you can see that's the thing that I love about these events. There is just such a wide breadth of knowledge and experience, wonderful minds coming together to continue to sharpen the pencil, so to speak, and stay sharp with your trading. I just love that. Swing trading stocks and options, love it. Cool. So we have a lot of different trading styles, trading experiences in different markets represented by people who are attending the call live. You've seen the 1975, 1987, 2001, 2008, 2020 markets. Yeah, so you've seen a lot. We should maybe have you up here presenting about all that you've seen happen with the different market dynamics over the decades of trading that you've done. Well, thank you all for being here for this presentation. I am the author of the Self-Reliant Trader Method book. I'm not really going to be talking about that here, but I just wanted to put a link if you are interested in checking that out. My website is TradeFocus.com, and the book can be found at /book. I've got 3 free bonuses when you buy the book. It's only $5. So that's the only thing that I'm offering today. For those of you who don't know me, it's a great introduction to my history and to my trading approach. And I ultimately teach a 4-step method to long-term trading success that can be applied for all traders, no matter how much experience you have. So anyways, here's a little bit about me. Some of you know me, some of you don't. So just a quick snapshot. I'm a wife, I'm a mom. I love to travel. I love to grow my knowledge. Here's a couple pictures. Picture of me and my husband and me and each of my daughters. My daughter Isla is 6 years old, and I have an almost 1-year-old named Leah. And, you know, as I mentioned, I've been trading Forex for 12 years, lots of ups and downs. So, you know, I can relate to the emotional journey that I'm going to be talking about later in this presentation. I used to work in corporate America. You know, I went to college, and after college, I started in a management trainee program at a Fortune 500 company in the US, and worked my way up, really loved it for many, many years. I was thriving. I was growing and just learning and developing and really eating up that process. And then I kind of hit a wall about a decade into my career. And I was like, you know what, this just isn't quite the lifestyle that I want in the long run. And that's where I kind of started researching other options that could potentially fund the kind of lifestyle that I was really craving and give me that time of freedom back in my life. So I started trading 12 years ago. I eventually retired myself from corporate America 5 years ago. And now I get to help traders around the world accelerate their own trading success, learning from my own experiences, but, you know, writing books, creating courses, and doing one-on-one coaching, which I just love all of that. I moved from the United States to Portugal 2 years ago, just kind of an interesting tidbit about me. I live on the island of Madeira. Has anyone been to Madeira? Give me a yes or a no in the chat box. A lot of people have never even heard of Madeira. It's a small Portuguese island, but it is beautiful. They call it the Hawaii of Europe. No. Ooh, someone has been to Madeira, Portugal. Yes, love it. So yeah, I've lived here the last 2 years. It's been a really incredible journey, and ultimately, trading provides me that ultimate lifestyle flexibility, which I think is what a lot of you guys are looking for, whether it's supplemental income, you know, building and growing your nest egg, or maybe looking for retirement. So I love being around like-minded people like yourselves, and just wanted to share a little bit about me so you guys could learn who you're hearing on the phone here. So let's get back to the agenda. Why and how emotions get in the way, the best way to remove emotions from trading, and where every trader's focus should be, in my humble opinion. And then again, at the end, I will open it up to questions. So please, if you think of a question while I'm presenting, just write it down, and I'll be sure to leave some time at the end where we can put those in the chat box. But I'm not going to be able to watch the chat box while I'm presenting. So why emotions creep in? Why do you guys think emotions start to rise to the surface when you're trading? What do you guys think? Why do emotions creep in? Again, use that chat box. It'll make it a lot more fun and engaging. Losses, fear, human nature, fear of missing out. Absolutely. Fear to not lose, afraid of losing. Yeah. Fears, doubts, you know, hunger for more, ambition. There's a lot of things. Too much risk. Absolutely. Lots of things. Being human. Yeah, absolutely. Money is personal. Money is on the line. Greed. Yes, yes. Love those. Thank you guys. A couple of the things that I jotted down were impatience, right? We want results yesterday, or at least, I can reflect back on some very specific moments early in my trading journey. And I wanted results like yesterday. Like I knew why I wanted to trade, which was I wanted to change my life. I wanted results like yesterday. I was impatient. I made a lot of poor decisions early on in my trading years. And I didn't get results as quickly as I wanted. So that definitely drove some emotions for me. Sometimes it can be unrealistic expectations, which leads a little bit into impatience, but there's a lot of facets to unrealistic expectations. Losses, as many of you mentioned. Lack of confidence, right? So a lot of times traders are doing something new when they get into the world of trading. They haven't been formally trained. So it's new and you don't have the results or the success to give you the confidence until you have the success, right? So you kind of have to act in faith a little bit early on, and confidence can wane really quickly if you're not getting the results you want. Also, overwhelm. This is a huge one. The beauty of the internet is there's so much information out there, and there's a lot of great free information out there. And it can just be so easy to get sucked into it all and just consume. And then you're kind of like not really sure where to focus or what to take action on, what not to take action on. Or you just kind of get in this endless cycle of just knowledge consumption. It can be quite overwhelming. And then even the process of trading can be overwhelming too. No clear focus is another one, and making trading decisions subjectively. So I saw there at the end, someone said not having a plan, not having rule-based trading. Absolutely. So there's a lot of reasons emotions creep in. There's this psychological process I like to talk about. Maybe you've seen this before, maybe you haven't, but this is called the emotional cycle of change. And it's a psychological model that has nothing to do with trading, but it's very applicable to trading. So stage, you have this emotions on the left, and then you have time across the bottom, right? So, and then there's this dotted line on the emotions. You have optimism or a positive mindset, and then pessimism or a negative mindset in this bottom half. So when you start at stage 1, uninformed optimism, you're in the positive, you're very optimistic. This emotional cycle of change basically applies to when you try anything new or when you make a change in your life. So it can be like for children learning to ride a bike, for toddlers learning how to walk. It also applies to traders when they decide to trade or when they decide to pick a trading strategy. Basically, any decision where you have a choice and you decide to pursue something new, you can go through this curve and this cycle. So stage 1 is that uninformed optimism, right? You're really excited. You really see all the benefits, right? Of doing something, of moving forward with something. I'm just going to apply this entire curve specifically to a trading strategy. For example, we're all traders on here, right? So stage 1, uninformed optimism, is really where you don't realize how much you don't know. So it's a stage where you're like, yes, I'm going to do this trading strategy, or you're really excited about the potential profits. You see the opportunities, but you haven't yet experienced the risks, the challenges, or whatever of using a particular strategy. And as I go through this curve, I want you to really think about where you are today with your trading strategy. And I'm going to ask you at the end to post it. So as I go through each of these examples, really try to internalize where you are, because it'll be helpful for you to decide how to proceed, right? So stage 1, you're really excited. You're like, yes, I'm going to trade. I'm going to use this strategy. Then some time starts to progress and you slip into from the positive to just under the negative. You get to stage 2, which is informed pessimism. And informed pessimism is where you start to realize how much you don't know. As it relates to a trading strategy, some time has passed and you might start to encounter some difficulties or setbacks. You might become more aware of the risks or the challenges you face, start to doubt the effectiveness of that approach. Maybe you start to have that negative mindset or pessimism about whether or not you can actually be successful with this trading strategy. So from there, it actually gets a little bit worse. So more time passes and you go a little bit deeper into the pessimism. And this gets you to stage 3, the valley of despair. And the valley of despair is where you fully realize how much you don't know, but you don't know what to do next. You're feeling lost. You're kind of at this fork in the road. You know, during this stage as a trader with a strategy, you might have just experienced a significant loss or setback. You kind of feel like giving up. That shiny object syndrome really starts to rear its head, and you feel a bit overwhelmed by whatever needs to happen with where you're at. You're feeling the losses. It's really this critical stage because you're going to be tempted to abandon your trading approach and return to something you used to do or to find something new. But the thing about doing that is you go back, you slide back up the scale here, and you start over at stage 1 again. It feels good in the moment because you take yourself out of a deep pessimism situation where you're feeling like bad, you're not feeling very optimistic. And you start here where you're feeling really optimistic about whatever else you find, or maybe it's a new strategy you just found online or something else you're going to try. But the thing is, what happens when you start over is you tend to just cycle through stages 1 and 3 over and over and over again. Have any of you experienced this cycle from going from stage 1 to stage 2 to stage 3, and then you kind of get in this rut and you're like, this isn't working, or you kind of fall victim to shiny object syndrome where you're like, I'm just going to find something else, or you see something else when you don't even really think you're looking and you're like, oh, I'm going to try that. No, I'm going to try that. No, I'm going to try that. Yes, sure. Yeah, no doubt. Absolutely. And like someone said at the beginning, emotions are human nature. This emotional cycle of change is human nature. It's something that we all fall victim to at different points in our life, at different decisions and cycles of changes in our life. But the cool thing is you can make it to stage 4 if you decide not to start over, if you decide to stick with it, right? So stage 4 is informed optimism. You get back above that positive in the mindset. You realize where you need to focus and what you need to learn or improve upon. So you decide to stick with it instead of starting back at ground zero again. You push forward, less and less pessimism. You start to realize, control what you can control, focus on what is going to move the needle, and you make it to stage 4 of informed optimism. You know, you've persevered, continued to refine your approach. You might start to see signs of progress and success. Your losses are smaller or fewer and farther between. You start to feel more confident. You're getting more profitable trades under your belt. You're seeing the light at the end of the tunnel. And you become more optimistic about your ability to succeed with this trading strategy. And then eventually, of course, you make it to stage 5, success and fulfillment. This is where you've achieved your goals. You learned probably a lot more than you initially thought you would in stage 1. And all of your hard work is paying off, right? So with your trading, that's when you've fully adapted to your new trading strategy. You're consistently making profits. You've got this sense of fulfillment and satisfaction, right? Because you succeeded in learning a strategy, deploying it, refining it most likely, and ultimately making money with it. And from there, you can scale up your growth and make more and more money as you compound your growth. But you've ultimately achieved your goal and you're reaping the rewards, and you're trading kind of almost effortlessly, like just it's mechanical at that point. So let me ask you guys, there's no right or wrong, right? And where you are on this is ever changing by the day. Okay. Know that you can control where you're at. Where would you say, which stage are you in today with your trading strategy? So we've got a stage 5er. Awesome. Kudos. You probably know all of these stages all too well. We've got some in stage 3, the valley of despair right now. Yeah. Between 3 and 4, which means you're starting to push through. A couple of people newer to trading are in stage 1. Got a 3.8. Love that. 3, 2, 4. So yeah, a lot of variety. everyone's journey is different too. People go through these phases in different amounts of time. So one thing you should make sure you never do is compare your journey to someone else's. It's very difficult to do that sometimes. I think that the good about comparison is seeing that other people have made it to stage 4 and 5, right? And you can do it too, but don't get held up on how quickly they were able to do it or whatever, right? Because you might be looking at someone and seeing their success and not realizing they're on chapter 20 of their trading journey, whereas you're only on chapter like 2 or 3. So if ever you compare to other people, just look for people that have been successful in what you're trying to do and just celebrate the fact that it's possible. And then go back to where you are and figure out how to move forward. So a lot of variety here. I hope you guys found this. For me, when I saw this, or when I learned about this cycle of change, it was kind of like a major light bulb moment for me. It was years ago, but I like to share it with people because I think it's so applicable to trading and to the exact scenarios that happen to people when they're trying to figure out what trading strategy they're going to trade. So if you ever find yourself kind of frustrated or whatever, I think just revisit where you're at on this emotional cycle of change. Be real with yourself about where you are and where you might need to push and persevere. And also, sometimes what you're doing just isn't working, and it's okay that you recognize that you might need to kind of go back to square zero, but you don't want to fall into a trap of just constantly quitting and cycling stage 1 through 3, because then guess what? You're never going to get here to stage 5 if you don't eventually push through and focus on some things that are going to make your results better. So that's it on that. Let's go to the next slide. This is another way that emotions evolve, right? So think about this chart as more of like the day-to-day emotions that you can feel. It can be a little different day to day, but we've got emotions like, you start trading a strategy or your trading journey, or even within a day, you can experience these. Like I said, you've got optimism, excitement, thrill, euphoria, anxiety, denial, fear. First you're excited, you're having a great day, and then, you take a couple of losses in the day or the week or the month, and you're like, and you got anxiety, and then you're a little bit in denial. That fear starts creeping in. Then you're feeling a little desperate or panicked. And you just capitulation, despondency, depression, hope, relief, and then optimism, right? So it's all about pushing through those emotions. Again, these are emotions that show up a little bit unnecessarily because we're so focused on results instead of a process, which we're going to talk about. So just curious, where are you at in your trading journey on this chart? Which emotion are you at in the moment with kind of where you're at in your journey of trading? If you were to like pick where you're at on this road, where would you be? Which one resonates with you most today? Panic? Yeah. Hope, anxiety, hope, the trading plan, love it. Capitulation. Yeah. So these emotions are real. We're human, right? Hope, right on, work on a system, then profits. Yep. So yeah, let's talk about that a little bit more. Let's talk about, we got fear, relief, anxiety. So a big variety of people on the call. And also probably this might be a little bit like humbling for you to be like, yeah, this is where I'm at. I'm in stage 3, or I'm in fear, I'm in panic. Maybe you haven't fully admitted that before being on this call. So kudos to you for sharing where you're at and being real with yourself. That's, half the battle sometimes. So let's talk about how we can remove emotions, or at least limit them, but I think they can be removed personally. And the way to do that is quite simple. And it's about focusing on what you can control and stop focusing on what you cannot control, which is specific to trading in both cases. So when you focus on what you can control, That's stepping into your power as a trader. And when you stop focusing on what you cannot control, that's also stepping into your power, right? Because a lot of traders, well, let's go into it. There are things in trading that you literally cannot control, but sometimes we think we can control. And then when we realize we don't have control, emotions can creep up. So what do I mean specifically here? The non-controllables. No trader can control where price goes next. That's the market. That's a lot. There's a lot of factors that go into it. We simply do not control where price goes next. My clicker's not working. There we go. We do not control when price goes anywhere, right? So sometimes we want it to go somewhere very quickly or faster than it's going, and it just sits in a ranging market for a while. You know, there's nothing we can do to control where it goes or how quickly it goes anywhere. Also, we do not control whether a trade is profitable or loses money, because we don't control prices. There are things we can control related to trade management, which we'll talk about in a moment, but ultimately, you can't will a trade to go to your take profit, and you can't will a trade to go away from your stop loss, right? Then there's unplanned market events, right? Sometimes they happen, they're not scheduled. Somebody says something or an article comes out that really impacts what you're trading. And we just never control those. There are things that we know in advance, right? Like, as a Forex trader, there's red flag news events, rate announcements, bank speakers, unemployment reports, things like that are scheduled every week or month that you can be aware of. There's resources out there where you can find the day and time exactly when those things happen that actually do move price up and down. Likewise in the stock market, right? There's earnings releases, there's other things that you can be from an industry standpoint or from a specific instrument standpoint be prepared for, but there will always be unplanned market events, so don't get held up in those. Ultimately, with trading, prediction is unattainable. So get it out of your mind that you can predict where price can go next. Anytime I hear a trader say that, like, oh, I bet price is going to go up, or I believe price is going to go up, get out of the mindset of prediction and change it to it being about probabilities. Based on my analysis of technical, fundamental, whatever, the probability is that this will happen, which is why I'm going to enter a trade in this direction, right? So trading is about probabilities over time, not about prediction. And with that, even when you have a profitable strategy, it's important to remember losses will always be part of the equation. There's literally no strategy out there that wins 100% of the trades, that's profitable on 100% of the trades. And sometimes that's hard to accept as a trader, right? You can teach traders a profitable trading strategy. They have a couple losses and they're like, what am I doing wrong? What am I doing wrong? I just lost 2 trades. I just lost 3 trades, well, losing trades are always part of it, because guess what? We're finding an edge that gives us a probability. It's not always going to be right? So you have to get it out of your mind that you're trying to predict with 100% certainty. Trading is all about probabilities over time. 1 trade, 2 trades, a week of trades, even a month of trading should not impact your belief in your strategy, right? Because there can be periods of drawdown, even when at the end of the year, a strategy is profitable. Yeah, I'm just catching up on some of the comments here. The fact is that it is hard to find profitable trading strategies. Okay, we'll talk about that more. And you hope and pray. Yeah, hope and pray does not work in the markets. Exactly. So if all these things are not controllable, then what do we have control over? Let's dive there next. Here's what we have control over. What market you trade, right? Are you a Forex trader? Are you a stock trader? Crypto? Do you trade ETFs? Options, Nadex, you get to choose, right? If there's something that you extremely, that's not suited for you about a particular market, weigh your options and make sure you choose trading a market that benefits you, right? If you're a stock trader, you trade equities, but you also work full-time during the day, maybe it's not ideal for you to trade the stock market because you're working your full-time job, right? Maybe you're like, I want to trade in the evening, or I want to trade in the early morning before I go to work. Well, find another market like Forex that's open 24 hours that gives you the flexibility to do that, right? So you get to choose the market that you trade. You also get to choose your trading style, right? So going back to kind of your schedule, your ideal time or way of trading, do you want to sit at your charts and have to manage your trades, like maybe as a scalper or a micro scalper does, where you have to wait there because the candles happen so fast, you need to be at your computer to do the analysis over and over again? Or do you prefer something more like swing trading, where you do a full analysis of the markets maybe once a week, and then on the daily you spend about 15 minutes? There's different trading styles: scalping, micro scalping, day trading, intraday trading, swing trading, position trading, and of course there's always investing, which is more of a buy and hold or sell and hold strategy. But pick something that works for you, right? Don't let your schedule or your availability, or don't design a strategy that isn't aligned with when and how you want to trade. That takes us to when you trade, right? I always tell this story because it's so humorous. When I was early on in my trading journey, and maybe some of you can relate to this, I laugh at it now, but I was working full time and I wanted to learn, I was trying to figure out this Forex thing, which it's a 24-hour market, which is a blessing and a curse when you're trying really hard to make something work. Because, I was working during the day, and I was like, I really want a profitable trading strategy so bad. And I was, at that time, over 10 years ago, I was system hopping like crazy, right? Like I was doing that stage 1 to 3 loop over and over and over again, just trying so many different strategies to see if something would just stick and like magically be profitable, even though I wasn't fully focused on any single strategy. I was just doing too much. But, I was like, ooh, I've read about, the London Open. Well, I lived in the United States at the time, and the London Open was when I was sleeping. So, I was like, ooh, but yeah, I read this, I'm telling my husband, I read about this London Open strategy. It's supposed to be so spot on, like so profitable. I'm going to have to figure out a way to make this work. I just have to get up at like 3 or 4 a.m. and sit at my, the analysis or the trading activities, like maybe an hour or two. So yeah, I'm going to get up, I'm going to trade in the middle of the night. If this can be profitable, I can leave my job or whatever, which was my goal. And so my ambition was very, very high. But guess what? As I started trading that for, a month or two, I wasn't showing up consistently because I was effing tired and it wasn't sustainable. And then like, okay, so what? What if it would have worked out, Valerie? Like, would you have really wanted to get up between 3 and 4 a.m. every day? No, absolutely not. That's not the lifestyle that I wanted in my trading. So just be mindful, there are literally endless strategies out there, unlimited, infinite trading strategies to choose from, right? So do yourself a favor and make sure that you pick one that aligns with the ideal trading schedule for you, whether that's a certain time of day or a certain level of engagement necessary, or like a certain number of hours per day, right? If you don't really want to sit at your computer 8 hours a day, then don't choose a strategy that requires that. If you don't want to have to get up in the middle of the night to trade, then don't choose a strategy that requires that, right? So I've been there, I've done that, I've learned the hard way. Hopefully you don't have to learn the hard way. You can just take my lesson. Also, one of the controllables that you have with your trading is knowing when not to trade, right? So I talked about those events earlier. There are known events that increase volatility and decrease liquidity for almost every financial instrument out there, whether you trade crypto, whether you trade stocks, whether you trade Forex. There are certain events that are scheduled in advance that move the market significantly. Sometimes people trade around those events, right? Sometimes people are wise and choose to stand aside. So you should know when those are for what you trade and know when to stand aside, right? When volatility is too high for your trading approach, and when liquidity maybe gets too thin for your trading approach. Something else that you control is how much money you risk. I could do this topic alone deserves an entire presentation because this can be the make or break for your trading, how much you risk. Think about this for a moment. Let me ask you this. How many of you in the comments, give me a yes or a no. How many of you have lost more money trading than you wanted to lose? Give me a yes or no. I have in the past, for sure. Tens of thousands. I was way too risky early on in my trading. Yes, yes, yes. Me, sometimes, yes, yes, yes. Okay. So here's, if you take nothing else away. Ooh, we got one no. Yes. Someone had a really good instructor and they learned the lesson early on. Kudos to you. 236338. Okay, so for most of us, you know, we get a little greedy and we get a little antsy. And like I was talking about, we want results yesterday, right? So we're like, you know what? And this was my mindset. You know what? If I'm going to do this, I'm just going to go all in. It's either going to work or it's not, right? That's just not the right way to do it. So think about it this way. You control how much money you risk and how much money you lose by determining how much money you allow yourself to put on each trade. You control it. So anytime you lose money or anytime you lose more money than you won, the only thing you should be doing is looking in the mirror, right? Because no one put a plastic water gun to your head and said, hey, you have to put this much on this trade today. You decided that. So what I'm getting at here is you should really think about what your risk tolerance is. What is your risk tolerance per trade, for example? How much would you be willing to lose per trade? And I like to think about this as a percentage of your account size, because that's something that's scalable as your account grows. You know, if you're in a period of drawdown, it obviously scales down your position size as well, which helps protect your money. You should be in this mindset of protecting your money first and growing it second. Because guess what? I have another analogy, or I have an analogy. Think about a sport, right? Whatever your favorite sport is, I'm going to use soccer. In soccer, when the game starts, the score is 0-0, and both teams feel like they have a good chance of winning, right? Well, what do you think happens when team A is down 4 points? Do they still think they have a good chance of winning? No, not in soccer. That'd be a major comeback. It's not impossible, but you got to dig yourself out pretty big if you're down 4-0 in soccer. And the same is true with trading. You should really think about trading as trying to minimize the drawdown so that when you do make money, you're increasing your chance of a win in the game, right? You're staying in the positive more than you're in the negative. So think about, as a percentage of your account balance, how much you're willing to risk per trade, and then do a thing where you can like say, okay, how many losing trades could I have in a row, right? And if it's only a handful, then that means you're risking too much, most likely. But the way you protect yourself even further is to set a max risk per week, right? What's the max risk or your risk tolerance for a given week? This is about stopping the bleeding, right? Because bad weeks happen. Sometimes the market is in a funk. Sometimes there's unexpected news that comes out that just tanks things. Like, protect yourself as a trader. This is your responsibility, right? It's your money. Protect yourself as a trader and say, what is my max drawdown that I'm willing to take in a week? And what happens if I hit that, right? Hopefully it never gets hit. But okay, so maybe it's 5% in a week. I don't know. There's no right answer. You get to decide this based on your risk tolerance. but maybe it's like, let's just say it's 5% in a week, which is a lot, by the way. I'm just trying to do an easy number. I hit my 5% down, then what, right? It's not just like, oh shoot, I'm down 5%, guess I'll go put more trades on. No, it's like, okay, maybe I need to go to a paper account for the rest of the week. Or maybe I need to reduce my position size in half until, I have a profitable week. Or, what's your max risk per month that you're willing to take a drawdown? Obviously, again, hopefully it doesn't happen, but you have to think in terms of you control how much you're putting on the line each day, each week, each month. You get to draw the line somewhere, and you should draw the line somewhere, or else you're going to lose all your money if you go into a period of drawdown, right? Which can happen even with the best strategies. So do yourself a favor. If all of you that said you've lost more money than you wanted to learn, right? Or than you cared to lose. And even for those of you who haven't, prepare for the worst, right? Know what your maximum risk tolerance is per trade, per day, if you're taking a lot of trades per day, per week, per month. And make sure that if that gets triggered, you have a plan in place for either transitioning temporarily to a practice account until XYZ happens, or scaling back your position size, or something in between there, right? You should know what happens. And then you should also know what you need to achieve in order to scale back up to wherever you were, right? So do you need a profitable week, profitable month, so many profitable trades as a net? There's a bunch of different ways you could do that, but you own that, and that's something you can control. The next one is how you find an edge, right? Trading is all about finding an edge and then optimizing your entries and exits, right? So on the finding an edge, I heard someone say earlier, like, I don't know how to find a profitable strategy. Well, here's how simple it is. Not to say that it's easy, but you find an edge. Think about, forget this component of like trying to find a strategy, someone doing it for you. Just think, where do I think I have an edge? What are some ways you can find an edge? You can trade with the trend. You can trade at support and resistance levels. You can use candlestick patterns. Well, you could use candlestick patterns, and you can also use candlestick sequences. There's a whole host of hundreds of indicators that you can use to identify an edge. There are hundreds of ways, thousands, endless, especially when you start thinking about combining them together, overlapping multiple time frames. So if you don't know how to find an edge, do some research online. There's tons of free information out there. How do I find an edge? What's the best edge? How do I identify the trend? How do I give myself a high probability chance of identifying whether price is a higher likelihood to go up or down, etc. And then from there, you figure out a way to determine your entries and exits. And then basically from there, it's all about trade management. And once you're profitable, then you get to decide how and when you scale your growth, which I always like to tell traders that it's really good when you do it based on performance and based on results, right? So don't just say, oh, I want to be at a $100,000 account in a year. And like, it doesn't matter what happens between now and a year, but in a year, I'm putting that 100K down, right? Don't do that. What you should do instead is say, okay, I'm going to start on a practice account. What do I need to achieve with my actual results from trading to feel comfortable to move into a $500 trading account? And these are just examples, of course. And it's like, hey, maybe I need to have a profitable month. Okay, well, when you have a profitable month, move into the practice account or to the live account. And then it's like, okay, I'm trading at a $500 account. What do I need to achieve to then go up to the next level, which is like a $2,000 account? Okay, well, maybe I just need a couple of additional weeks of profitable trading, and then I'll have the confidence from the first month and the 2 weeks. I'll feel good. You get to decide what that is, but baby step it, because when you start trading with larger position sizes, like if you go from a $500 account to a $100,000 account, your position sizes are going to be so starkly different. You're not going to have the confidence to really go up. So, be mindful that you control all these things. And you get to decide all of these things. So while you don't have control over the uncontrollables, you do have control over these controllables. And I know I'm getting a little long-winded here, so I'm going to try to speed up. I'm really passionate about these, as you can tell. So you can eliminate your emotions with focus. A couple of thoughts there is to trade one strategy until you're profitable. A lot of people, myself included in my early trading days, tried to take on multiple strategies, just throwing spaghetti noodles at the ceiling, seeing which one would stick. And I had it in my mind, the more I do, the better, right? The more strategies I try, the faster I will get to my profitable strategy. Can anyone else relate to that? Maybe you're there now. You're just like, literally, oh, I'll try this. Oh, I'll try this. Oh, I'll try this. Yes, again, it's human nature. And our ambition and drive to succeed in trading tells us to keep just trying everything. Well, that is actually to your detriment. When you trade one strategy, it forces you to focus. It forces you to focus on the details that you would otherwise miss, right? Really honing in on, well, do I really have an edge, or should I make this tweak or this tweak, or how can I improve my entry so I can get a better price, or ooh, maybe I need to modify my trade managements because I've been tracking my trades and I see that had I tightened my stop loss or locked in profit earlier, I would have had better results. Like, you can only get to that level of detail by focusing on one strategy. Are you capable of trading profitably more than one strategy? Absolutely. But not from day one, right? Get success on one strategy first and then add more, sure. But get success on one first. That's what I've seen really work for traders. Also, use an objective trade plan, a rules-based, black and white. There's no gray area. When I see this, I do this. When I see that, I do this. When I'm in a trade, I do this. When I'm have pending orders that haven't triggered, I do this. Everything should be rules-based and there should be no decision-making in the moment. It should be like, you could look at your trade plan that's written on a piece of paper and say, oh, yep, I should do this, I should do this. So your rules should be very objective. Write it down. A lot of people think that just because they have it in their head, it's good enough. No, no, no. Take the time to write it down. See if you can do it. I challenge you. I challenge all of you. If you don't have your trade plan documented, your trading strategy, write it down. What do you trade? When do you trade it? When do you not trade it? How much do you risk per trade, per week, per month? What are you looking for to find your edge? What is your qualification checklist? Where do you enter? Where do you put your stop loss? What's your ultimate profit target? How do you manage active trades? Those are all questions you should be able to objectively answer with rules. So challenge yourself to do that. Hold yourself accountable to following your trade plan, right? A lot of people are like, yes, I did it. Success, stage 5. I have a trade plan. It's written down. I'm already at my success. No, absolutely not. You have to implement it, right? You have to be able to actually follow the rules and show up when you're going to say you're going to show up, and make sure you manage the trades the way you said you were going to manage them without letting emotions get in your way. So make sure you're tracking your trades and making sure you're following your rules. Track your performance, track your missed trades, track your operational errors. You can work to optimize your entries and exits and trade management, as I mentioned earlier. And start small, right? Start small. Don't put big dollars on the line when you're still enhancing and optimizing and refining, right? Start small, scale your growth once you've achieved your personal performance growth goals, right? If you want a deep dive into this process, this methodology that I use to trading, to getting a written down trade plan that's super thorough and rules-based, check out my book. It's $5. If you read it and you find no value, I have 100% money back guarantee, but there's tons of value in there. The exact method that I follow and that I help traders follow is in the book. I include 3 free bonuses. The website's tradefocus.com/book. And a quick recap of everything we covered, why and how emotions get in the way, the best way to remove emotions from trading, and where every trader's focus should be, which is on one strategy, documenting it, implementing it, optimizing it, and then scaling it. So, and I just love this little comic. Don't you remember anything? You were there all day. I had recess. And that's what I feel like when my 6-year-old comes home. I'm like, what'd you do today? Oh, nothing. I'm like, come on, tell me what you did today. So yeah, our short attention spans these days. Any questions for me? I've tried to stay up on the comments, but feel free to type questions you have. We have just a couple minutes here before the next presentation. I'll keep an eye on the chat box. I'm just seeing if there's any that I missed. That's what I liked about your instruction. You put all the rules down on paper and give it to follow us. Yes. Love that. So I have a program where I teach the exact trading strategy that I do. If you're interested in that, you can just go to my website and message me and I can give you info on that. But ultimately, if you have any questions, post it in the chat area. Thank you for attending, participating, etc. I have a couple ways you can connect. I have a podcast that has new episodes every week. It's available on anchor.fm/trade focus podcast. My website and book are available at TradeFocus.com. There's also a messaging feature where if you want to get in touch with me, you can send me a message on my website. You can follow me on social media, Facebook.com/Valerie Fox fan. I have like quotes that I like and podcast episodes and special events and things like that. So I would love to have you follow me if you're interested in what I have to share. And then, if anything else comes up or if you have a specific question, feel free to email me, support@tradefocus.com. And thank you for all of your kind words in the comments. I hope you enjoyed the presentation. I don't see any questions at the moment. So if you think of something after this, feel free to take a screenshot or a picture of this last slide here, and you can connect with me after the presentation. But trading psychology is so very important. If you feel emotions creeping up to the surface, remember that you are too focused on the result of an individual trade and probably not focused enough on the process of trading, of having a written down plan, focusing on one, getting your flawless operational excellence in being able to implement it. If there's anything I can do to help, don't hesitate to reach out and message me. Someone asked, are you still swing trading or have you gone back to day trading? I'm still swing trading. It's working really well. I love that. I've done everything, right? I've scalped, I've intraday traded, I've day traded, I've swing traded. Over the years, I've done a lot of different trading methodologies. I'm currently swing trading every single day and week. And I love that because, basically I'm holding trades anywhere between a day to a couple of weeks. So I'm looking for a little bit bigger in the moves in the market than just a day trader. My stop losses are a little bit larger, giving the trades a little bit more breathing room. And the best part about it is it takes less time. So I spend maybe an hour or two analyzing my charts over the weekend, putting my pending orders in for trades that have met my criteria. And then each day, I only have to check my charts once or twice a day, and it's like 5 or 10 minutes each time just to, I personally do a couple of manual trade management, but that's because that's kind of what I like to do. I like to lock in my profit as the trade moves in my favor and move to break even at certain points based on price action. But yeah, I'm still swing trading and loving it. How long did it take you to achieve the success you wanted? Longer than it should have, but to be more precise, it took me over 3 years to become a profitable trader. So again, I've been trading for over 12 years, and my first 3 years of trading, it's almost like embarrassing to say it, but it was my journey and that was my reality. And I made a lot of mistakes, very humbly admit that. And I think it's made me a better trader and a better trading coach, but certainly those mistakes are not necessary and that timeline is not necessary either. But 3 years of banging my head against the wall, trying to figure out this thing called trading, doing it the hard way in a lot of cases. But hey, I got there and I didn't give up. I did a lot of cycling between stage 1 and 3, a lot. Someone asked, why do most successful traders trade more stocks than Forex? I think that, I'm not sure where you got that stat. I think maybe that's I've never seen a stat that says most successful traders trade the stock market instead of Forex. If you have seen that stat somewhere officially with a study, I would love to hear it. My gut tells me maybe that's your belief. In either case, there are profitable and successful traders in all markets. I think historically speaking, there is a longer history of individual traders trading the stock market because of the availability of it earlier in time. And I think what happened is a lot of people started with investing, more of the buy and hold. And, there's some limitations to day trading the stock market, which keep a lot of traders out, right? There's a certain, in the US at least, there's a certain account balance you have to hold, which I believe is $25,000 to day trade in the stock market, which is prohibitive for some traders, right? So Forex doesn't have that requirement for day trading, which is why a lot of traders are interested, among other reasons, in Forex. But yeah, a lot of books talk about stock trading. I think that's just stock trading books are going to talk about successful stock traders. And I think there's more famous stock traders just because of, again, the investors and the hedge fund managers and things like that. I don't know. I know a lot of successful Forex traders, a lot of successful options, futures, stock traders. So I guess maybe it's your perspective, but I think also there's that history component of the availability of individuals trading these things. It's been around a little bit longer in the stock market than in Forex. Good question. Any other questions? All right, my time is up. I'm 2 minutes early. So thank you all so much for attending and participating. I hope you had at least one golden nugget, if not many, from the presentation. And definitely connect with me and feel free to reach out if you think of anything after the presentation.